Hey guys, welcome to this video. In this one, I'm just going to talk about the SPX trading strategy that I mainly teach to my members. And it's something that works great because at any time you're always well aware of your exposure in the market and how you can handle that to stay solvent at all times. So you can be a solvent trader within this particular asset. So let's jump into how that works. Now, you might have noticed already that I've got the monthly chart up, and you can see well, let's look all the way back. You can see generally the way this market moves is up. Okay, now I'm quite heavy on equity markets, and I trade the FTSE a lot. A lot of people know that, and I find it quite simple to trade. But if you look back, you can see generally the market is moving up over time. Now, it doesn't happen all in one swoop. This chart goes back to the 80s, 1980. And the general move is up. So you've already got a consensus for this. And even before the 1980s, that was literally how things go. It's just going to ascend as economies grow. Okay. Now, there's always going to be times eventually where that stops. And often people have investments in lots of different things that go down. And it's because of economic crises and things like that just happens eventually. You can't really get away from it. But obviously, you're going to need to deal with that. Now, it's going to depend whether you're trading with leverage or you're literally cash buying. You might have stock holdings that are within this index. Okay. But generally, you want to be fully aware of how far you can expose yourself. So should the market actually come down, to this point, for example, can you sustain it? Now, if you know the general move is upwards and you know you could sustain a move that low easily, then you shouldn't have a problem trading it long term. And if you're really risk averse, you can actually start to look to scaling long at that point in the market. And if you look even lower and you really were going to be risk averse, you could do the same thing down. But the benefit with these markets is the fact that you can see generally it's coming up over time. So as long as you can stay solvent within the moves towards those key moving averages or those big price drops that happen eventually, like you saw with COVID, the financial crisis, and you're seeing now with the current state of affairs around the world and the global economy, as long as you can maintain that and you can incorporate hedging methods like I do to stay afloat, then it's much easier to sustain your trading with this. With a lot of different asset classes, you've got things like the euro, for example. I'm just going to load that up. The euro against the dollar, if I go on the monthly, you can see that's a really big swing up and then long periods of down moves and then up periods and then down periods. And that's because central banks basically change their stimulus and you can come up for a while and then down for a while. And that obviously gives a larger swing in the market. So that's completely sustainable as well with the methods I use pretty much. But you can obviously see this is going up over time, but you'll notice that it does have long periods of swings down, whereas other markets since the 80s and beforehand, that's not the case. So it's much easier to measure whether you could remain solvent in any market. In other words, you could stay afloat, your capital is not going to be reduced significantly, and you can maintain any fall in the market and, continue with that upwards move. So that's why I find things easier, and that is how you can trade markets like the SPX. I just flick that back up. Your job generally would be to buy on the larger moves back because you would get what I call market value. Okay, if you're really risk averse, that could be down here. You could have bought it here, like I said to, and so on. Okay, because that general uptrend is where we're going and you want to get good deals. You're not looking to buy high at the top of moves. You want significant pullbacks so that you can get long. You want to buy dips within that uptrend. That's how you get a good deal and make money. Thanks for watching, guys. Hope that really helps. That's the SPX trading method and a little bit of knowledge about it. I'll see you in the next video.